With stronger metal prices bringing renewed attention to junior mining stocks, more people are starting to look at exploration and development projects again. This video is for those people, not to talk about price targets or predictions, but to walk through how I personally researched junior mining companies and projects before forming an opinion. This is not a checklist to find winners. It's a framework to understand risk, quality, and whether a project even deserves more time. So imagine this. A friend or co-worker pitches you a gold mining stock. He says it's cheap, has huge upside, and gives you a ticker and company name. Is this just hype, or could it be a real opportunity? In this video, I'll walk through the approach I take when reviewing projects and the companies carrying out the work on the ground. This process involves reviewing 4 major factors. An investor friend of mine once called them the 4 Ps: people, project, price, and potential. Each of these matters, and there's no strict rule about where you start, but each one needs to be examined on its own before forming a conclusion. Personally, as a geologist, I start with the project. Before geology, before grades, before news releases. Where is this project located? Is it in a mining-friendly jurisdiction? Is permitting realistic or slow, political or uncertain? A good project in a hostile jurisdiction can die quietly. A mediocre project in a supportive jurisdiction can sometimes advance. Jurisdiction sets the ceiling on what's possible. Next is access and infrastructure. I want to know how hard and how expensive it is to work here. Is there road access, or is everything helicopter supported? Is power nearby? Is water available? How long is the exploration field season? These factors don't just affect exploration costs, they affect whether a deposit could ever be mined. Some great geology never becomes economic because logistics overwhelm it. Then comes the geology, the core of any project. What commodities are being targeted? What is the deposit model? Is this grassroots exploration, expansion drilling, or resource definition? I'm less interested in short-term market narratives and more interested in whether the geology supports something that could realistically be developed. When companies report drill intercepts, I always look beyond the headline. How deep is the intercept? What angle was it drilled at? Is this surface-friendly mineralization or something that would require underground development? A strong intercept at 800 meters depth is very different from one at 100 meters. This is where understanding underground versus open pit potential really matters. News releases rarely emphasize depth, geometry, or continuity. But those details drive economics. Next comes the people. I spend real time here. Who is running the company? Have they built mines, sold projects, or successfully advanced assets before? Or is this a lifestyle company that survives mainly through dilution? I read technical backgrounds, past roles, and yes, I read forums like CEO carefully. Not for hype, but to identify patterns. Long-term shareholder sentiment often reflects execution quality. Then we get into what I call the dark side, investor relations. IR isn't bad, it's necessary. A good project with no visibility can fail to raise capital. But balance matters. Is the company spending more energy on promotion than geology? Are there constant press releases with very little technical substance? Hype can make money short-term, but it rarely builds lasting value. The best companies usually communicate clearly, not loudly. After that, I look at price, which for me really means stock health and the balance sheet. Price alone doesn't tell you much. Context does. How much cash do they have? What can they realistically accomplish with that cash? One drill hole or a full program? Do they have enough technical success to justify a financing, or are they likely to dilute just to survive? Dilution isn't inherently bad, but dilution without progress is a red flag. And just because a stock looks cheap doesn't mean it is, especially if a consolidation is looming. Finally, I look forward at potential. What are they planning to do next? Are they testing meaningful extensions, chasing new targets, or just drilling around a known zone to generate headlines? I want to see a geological thesis for the next phase of work, not activity for activity's sake. If it's a grassroots project, I want to see value-adding exploration. If it's advanced, are they planning infill drilling, step-outs, or bulk sampling? So that's my process. It's not perfect, and it doesn't guarantee success, but it helps filter noise, avoid obvious traps, and focus time on projects that at least deserve serious consideration. This framework applies whether you're a geologist, an investor, or just curious about how mining decisions get made behind the scenes. You may have noticed these same principles showing up in my project review videos. I usually start with history, partly because mining history genuinely interests me, but that still falls under the broader project context. This is how I approach reviewing junior mining companies and projects. Let me know what you think. And if you're active in the junior mining space, feel free to share what you think I might be missing.